Welcome to the Weekly Spark, your fast 5-minute flash of insight into the world of mortgage and real estate. Every week, we're here to ignite your understanding of the market, from mortgage rates and housing trends to legislative updates and insider strategies. So let's strike the match and spark your week. This is the Weekly Spark.
What's up? Welcome back. We took last week off. Both of us were traveling and we couldn't make it work. So here we are. We are back. We've got a really cool loan program update at the end of the video. So realtors, make sure you stick around. This may add some money to your pockets because people don't know how these things work. But we'll jump right in. Jason, how are you?
I'm doing great, Ryan. How are you?
I'm doing well. Just getting settled in Puerto Rico, and I'll be here for a couple weeks. So you'll see this nice green room behind me for the next couple of weeks of the Weekly Spark. All right. So we'll start off with the jobs report, and the report is in and ... What do you got?
Yeah, so Ryan, I think we've been kind of talking about this for the last several months now about how the BLS really gives us BS numbers, right? So for the month of September, we were expecting 50,000 jobs, and we ended up seeing negative 32,000 jobs, which isn't a great number, right? The previous month was revised. They said that we gained 54,000 jobs, but we actually lost 3,000 jobs. So obviously, as we've been watching the data, Ryan, we've been talking about the BLS getting their numbers wrong. They've been revising, and they've been wrong 3 out of the last 4 months miserably. And this is the reason why we've been pushing for these rate cuts, right? We really need an injection in the market to help our economy grow.
Yeah, it's pretty crazy how we see these revisions down month over month, year over year. We see them every single time. And then also, I've heard some rumors about this going to blockchain, which may eliminate a lot of the human aspect of this. I think we're gonna see some great advancement in that area coming up soon. So I'm pretty excited about hearing about that. Next up, we've got the government is ... closed.
Well, I think everybody's kind of heard that the government has officially shut down. The parties are not in agreement. What a shocker, right? But here's the thing. So the government shut down, really the length of time that it's going to be shut down is really going to determine the impact of what we're going to see. So the CBO estimates that we're going to see about 750,000 furloughed employees. And some of the risks, Ryan, that we're really going to be watching is, private government contracts may not be getting paid. The BLS jobs report and claims may be delayed, which means we may not know what decision the Fed's going to make in October, coming this month in October in a few weeks, right? If they shut down for more than 16 days like they did back in 2013, will we get another rate cut? Will we leave it alone? We may not have the data to really know which direction we're going to go. Lastly, we want to worry about the impact on the mortgage industry. Government loans like VA, FHA, and USDA, they could be delayed. Now for us, because we're a broker and we have several options out there, we do work direct with those, with VA and FHA and USDA rather. And so we still will be able to fund loans if this continues. So we'll just kind of be watching this data and see what happens, Ryan.
Yeah, it'll definitely be interesting to see how it plays out, and hopefully some good comes out of it, and they'll be able to come to an agreement and get back to work. Let's jump to the charts, kind of see how this most recent news has played out in the charts.
Yeah, so let me grab the charts here. So here, the good news is, when we have uncertainty in the market, it's good for bonds, and what's good for bonds are good for rates. So as we've been talking about over the last couple of months, we have seen this upward momentum. And we hit this local top. We really see what we call a double top here. And we have kind of drifted back. The good news is we're kind of riding this 20-day moving average. We want this to hold here. And if we see this kind of stepping upwards, that really is a good sign for bullishness. And I do want to show the 10-year Treasury. So the downward momentum is good for rates. This is the inverse, as we all know. And I really like to see that we've kind of broken through this 25-day and we're under this Fibonacci level. So we do have some nice room to run all the way down to 4% in 10-year treasuries. So we'll hopefully this momentum will continue and we will continue to see rates grind lower.
I think that magic number is definitely right at that 4 for the 10-year treasury. We're going to see some really good benefits in rates right around that level if we can get back down there. We were real close, and I think we even wicked underneath it at one point. You can see down there, it touches it. I think it's going to be good to see it push towards that. So excited to see how that continues. So let's jump back in. This is the loan program that we've got to spotlight today. Energy efficient mortgages. What do you got for this?
Yeah, so Realtors. So the energy efficient mortgage, or the EEM, is really designed to help homeowners roll the cost of energy savings upgrades. So like think new windows, insulation, solar panels, or high efficiency heating and cooling right into their mortgage. And because these improvements lower your utility bills, lenders actually can stretch your qualifying ratios. Basically, it just means you're able to qualify for a slightly bigger home or just enjoy the savings without stretching your budget. So I'm going to give you an example. Let's say you want to install, energy efficient windows that cut your heating and cooling costs by $100 a month. And EEM allows you to finance those windows into your mortgage, and the utility savings help offset the added cost.
Yeah, it's a pretty cool environment to operate in. There's not many people that utilize it. And, oftentimes we hear of people that want to make upgrades after they close. We can kind of finance that stuff in and get it taken care of upfront for them. So it's a really, really cool benefit. So awesome, man. Well, that's all we got for this week, and we will see you on the next one.
That's a wrap for this week's edition of the Weekly Spark, brought to you by Creative First Mortgage. If you've got questions or want us to cover something next week, please let us know, shoot us a message, and until then, keep your deals moving and keep your week lit. See you next time.